All right, what is up, everybody, and welcome back to another financial trivia. We are on to week 11. I know we've been a little bit sporadic with the uploads. My life got a little busy, Ryan's life got a little busy, but we're still back for another episode. We've been playing with the audio a little bit, so hopefully my beautiful sounding voice comes in very nicely. Ryan, how are you doing on this fine Saturday?
Doing well on the fine Saturday. Thank you.
Absolutely. Good to hear it again. And we've been a little bit inconsistent, and as the holidays come closer, it might be a little inconsistent as well. Who really quite knows? But if you're new to the YouTube channel, make sure you're checking out Ryan's channel on YouTube as well. He does a lot of very good videos there as well. But also how the financial trivia game works. You have 20 questions, 20 seconds for each question, and then this game is accessed through the Discord of the Kingdom. And if you win, you can either get a free month in the Kingdom Discord, you could get a free trade courtesy of Ryan or myself, and then if you make money from it, we can split profits. And anything else, Ryan? Membership or mentorship with you, I believe.
And it's up for grabs if someone wants to do it. Yeah. The other things we can think of, we can get creative. Turkeys, apparently, is what Rock suggested. Whatever.
Yeah, no, and I know that it's high, and Tyler have always suggested that I do your homework for a semester in math if you
There
win.
we go.
But I mean, I don't know if I could do all that.
Yes. Oh, and you can.
um,
The one bit we
so
didn't mention is that you can
yeah.
gift a free month if you want to. Sorry.
Yeah, yeah, no, absolutely. No, dude, all good. And yeah, so again, how the game works, again, there's 20 questions, and the 20 questions cover everything from economics to stocks to options to
Taxes.
personal finance. Literally anything under the umbrella of finance and money is all up for grabs here. And if you get the most points at the end of these 20 questions, it's speed and accuracy. You get the most questions and the most points correct, then you are the winner for this week. So we've got 4 people in here for this week. Might be because we missed last week, maybe. I don't know. Some people are busy. We get it. We do this every single week. If you are part of the Kingdom Discord, you get free access to this every single week. So you ready to get started, Ryan?
Yes,
Beautiful. And Rock says, I forgot to study up on my candlestick patterns. I'm sure Ryan put one of those in here.
I did. And I think it's going to be pretty easy, so don't worry about it.
All right. Absolutely love to see that. So 20 questions, 20 seconds for each question. Let's get it going here for coming in with financial trivia week 11. And we're going to get excited here. So here we go with the first question coming into play. When considering taxes and selling premium, except with a short put, when does the premium received become realized? And I believe this is your question, Ryan, to start us off today.
This is, and yes, and hopefully, I'm pretty sure everyone here is in the US. I don't know about Rock for sure, so that helps. No international because these are US tax questions.
Love that. And you, Ryan, go ahead and explain why it is actually all of the above and not just one of these.
Yeah, it's all the above on this, with the exception of a short put, right? That's why I put it in there. So your tax when you receive premium, it's not realized till you close it, till you're assigned, or it expires worthless. So all three of those you have become realized at those 3 points. But if it's a short put and you're assigned on a short put, it doesn't become realized till you sell that stock. So that's the only caveat. That's why I would put except with the short put.
I mean, I think we've done quite a little bit of taxes, I believe. Questions this year, I believe, Ryan, so far, right? We've done a lot.
Yeah, I've thrown quite a few of them. I like to. I don't know. I don't mind talking about taxes. So
Yeah, and especially because we're getting to that end of the year, guys. Those tax bills are gonna be coming in, those tax paperwork files are gonna be coming in sooner than you think, and around January and February usually when they usually come around, I believe.
yes, depends on what they are, but yes, depend. I think they have to get them out by February, midway through February, midway through
Yeah.
March, one of the two.
Yep, absolutely. And Hannah just got out of Zora and is now into Bonk Coin. Hannah is trading altcoins while listening into trivia. And Rock has a question. What is your question?
And there's no California rocks. It's U.S.
Heck yeah, dude. That's what's up. What is the question, Rock? We can show the leaderboard at least here. So
Yes.
starting off,
Uh,
2 people got it right, Naomi and StratCac. Congratulations for getting a head start. Again, there's 19 more questions to go, plenty of games still to play. Go ahead, Ryan. He's a tax question for you.
Can you avoid trading taxes for 3 years like W-2 income taxes? I have no idea what you're talking about with W-2 income taxes. What do you mean by avoid them for 3 years?
I wonder if he's thinking of like, can I just like not file them and hopefully go under the radar kind of thing for a couple of years?
Maybe I don't. I don't know.
Yeah, no one's gonna who's gonna audit me, right? Like,
You don't have to pay them until 3 years max. Rock, I have no idea what you're talking about, but you need to talk to a tax professional. I don't know.
they file exempt. Oh, interesting. Okay, yeah, that might be a tax professional question. Maybe hit up my boy TurboTax. Maybe
Yeah, maybe.
I don't
Yeah,
know.
talk to HR Block.
Yeah, H&R Block, and the IRS is gonna be secretly listening into your H&R Block call. You're gonna see IRS entered the chat into Discord.
Yeah, gonna have some trouble.
Uh, right. All right. Question number 2, rattling off the next question here. Which factor most reduces the equity risk premium? We got fiscal deficit, falling FX reserves, and industrial consolidation. Which factor reduces the equity risk premium? It's a weirdly worded question, I feel like at times, but I think it's pretty okay. Oh, okay. Everybody's got it basically, except for one, which is no big deal. Again, the idea behind this question is that if you want to reduce the equity risk, again, the risk means you have a lot more volatility, which means your premiums get a lot higher as a result of it. And so, if we have a lot of macroeconomic uncertainty, like inflation, jobs reports, those kind of things that are macroeconomic based, that creates more uncertainty in the markets. We're actually kind of facing that right now as we speak. I know that they just canceled, I believe, Ryan's CPI data for October, which kind of sucks. And the jobs data was not coming out for a while, which creates the uncertainty. Now we're not sure about rate cuts, which is why the market, I think, over the last like week and a half, maybe 2 weeks, the market's been unpricing in the rate cut in December because we don't know if we're getting a rate cut in December now because of all the data we haven't gotten with the government shutdown. So with all this uncertainty we have, that's why volatility is really high. That's why the premiums are really high as a result of it. And so once those come back down to a calmer, idea, a calmer, area, then those premiums usually go down. So it reduces the risk in that case.
Gotcha.
Anything else you want to add to that, Ryan, or no?
No, I think that was good. Um, I think I know that the rate cut was down, and then Friday the chance of it in the prediction markets went up. So, who
Yeah.
knows? I mean, lack of data might be fine, but also lack of data might not help. And then Ron
Yeah.
did ask,
Yeah.
has this ever happened before in market history? I believe this is the first time there's been a shutdown when data was supposed to be released, but I'm not positive. I don't know if you know French.
Off the top of my head, I really don't. Honestly, I mean, but the thing is, though, which is crazy, Rock, no matter what, is this manipulation every single day, like in the market. Like, it doesn't matter. Is it a lot more right now? Yeah, I would say so because of just the announcements. True social posts do not help us at all ever. With all the data, all these things that come back out, it's definitely probably one of the more volatile times I've seen in the markets. I can't say for certain it's the only time because the market's been out for 100 plus years, obviously. So it's crazy. The reason that we got that huge rate cut, like boost, is because I think two Fed members came out and said that I would support a rate cut if it comes down to me, and then somebody else said I was going to support a rate cut as well. So that kind of boosted the probability of a rate cut to like I think it's like 50 something percent now. Last time I checked, maybe a little bit lower than that, but it's still
Yeah.
like a month ago we were looking at like 90% or 80%, I believe, and now the market is unpricing in that rate cut because of the uncertainty. So,
Yes,
it's kind of interesting in that aspect.
it's true.
So, I mean, is it manipulation? Of course it is. Is it wild? Of course it is. Is it the wildest I've ever seen it? In my experience, yes. Again, I haven't been in the market market for, longer than, I was in the market now. I've only been in the market since like COVID 2020 when I was younger. So I wonder if you can look back into like, the history of the last 100 plus years and see that. But I would, if with my very limited knowledge of the entire market over many years, I would say this probably might be one of the highest, if not the highest, in my opinion. But again, I don't know. So very interesting topic though, for
I
sure.
don't. Yeah.
So I'd love to see that you alive us did it very, very well here. Love to hear that. What a time to be alive indeed, Rock. Question number three, true or false? In terms of taxes, well, more taxes, Ryan. Buying a clothes or a worthless cover call directly reduces your cost basis of your shares. Is that true
Directly.
or false?
Directly. I should have
Directly reduce.
highlighted this or bolded that one. Excuse me, but I was trying out a new way to
50-50
upload
chance
these
no matter
questions.
what.
I'm sorry. What?
50-50 chance no matter what. And the correct answer is false, Ryan. Take it away.
Yeah, so the correct answer is false. So, like, in terms of taxes, it doesn't actually reduce your cost basis. When you sell your shares, excluding an assigned short put, your cost basis is your cost basis. But premium received with a covered call indirectly reduces your cost basis. So, like, you can theoretically think that, okay, now I have free shares. But of course, when you sell them, they're going to have a cost basis still, and that won't be affected by the premium you've collected on your covered calls.
Love that. And it looks like Tyler just joined in. Tyler, welcome on in, my friend.
Mm,
That's why I saw that we have 5 people answering instead of 4. So I'm guessing Tyler
ah,
already joined in.
smart.
See, I'm very he's trying to sneak in here. You see that? He's trying to sneak into the game without even being noticed.
Yes. Yes.
I see what he's doing. That's a cute penguin, by the way.
By
Thanks.
the way,
That's a cute, really.
I think it's a 66% chance on Polymarket, 25% increase or decrease, excuse me.
Oh, dude, if it was an increase, we would be in so much
No,
trouble.
less than 1% chance of an increase, obviously. But I hear what you're
What
saying,
is
Hannah, with
it?
Polymarket. It's a good way to gauge, it's an idea. Get people's interpretation of what they think it's polling.
What is
Go ahead though, please.
the Oh, I was gonna say, what's the CME group? The Fed Wash tool I use, the CME one is very, very, pretty accurate. They're pricing in 71% chance of a rate cut now.
Okay, well, that might be the better thing to look at.
Yeah, I've always liked looking at this one much more. But
Doesn't
so last week, this is why we got that crazy rally on Friday, because last week, the 14th, it was a 44% chance of a rate cut, and now it's 71. That's
mm,
almost a 30% bump for a rate cut.
mm,
Oh, wow, that's one that got shady. Interesting. Hmm. I always like it because, like, they show, like, the breakdown of, like, previous week to, like, now, and then, like, what happens in the next month potentially, and what's happening in, like, the next year. Hannah, drop in the chat if you want to. I would love to see, like, what you use, because I always would love to learn other resources, not just obviously CME group might not be the end all be all one. So I'd love to know what yours is 100% because I always like to hear other people's thoughts on it. So please feel free to drop in the chat. But we're going to keep moving on. Question number 4, which is not all a long-term taxable gain?
lots of taxes, guys. Going into the well of taxes. That's why I asked for some ideas, which some people gave. But yes, so lots of taxes. I hope everyone's okay with that.
I couldn't even find it. So did they like message you directly, Ryan, for the questions you asked people or?
Oh no, it was on trading chat. But Tyler and E-Time mainly the only ones, and they're very broad, which is good. Like subject matters. I can tell you them. I just gotta go find them because I wrote them down. Um,
All right. Well, feel free to explain this one. Feel free.
Yeah, so which is not all a long-term taxable gain. The answer is SPX long call held for over a year because SPX is preferential 60% long-term, 40% short-term, regardless of holding period. Whereas Tesla, QQQ, SPY, all of those are always, I believe, always taxed long-term if you held it for over a year, and then all short-term if you held it for less than a year.
Hmm. Interesting. I honestly didn't know that, honestly, but I would have used that as an idea because what does Tesla, QQQ, what do they like all three have in common that SPX doesn't? Is SPX is index and the other ones are not. They're
Yes.
ETFs or just original companies. So that's what my guess would have been anyways.
Options on indexes is correct, you're right, Tyler. I thought that would mean that the index itself would also be preferential, but, that might not be the case.
Yeah, and so far, so we're about 4 questions in. We have Naomi in first place, Strat Cat right behind in second, Exploding Head. I have no idea who that is. I'm gonna guess maybe Tyler,
It's Tyler.
and then I'm a tie, and then Forward Inevitable. I'm guessing that's Tyler.
Yeah.
That's all I got. Moving on to question number 5. A bond is trading at a premium when what? So bond question. Is it when the coupon rate is less than the market rate? Coupon rate is greater than the market rate? Duration is low or inflation is low? And the correct answer is the coupon rate is greater than the market rate. Okay. Because the coupon rate is the fixed percentage of your bond that you're looking at here. So if that is locked in basically as an interest rate, whereas the market rate obviously is going to adjust based on current economic levels, right? So if your coupon rate that you get locked in at is say 5% and the current market is bonds is 4%, then you have a premium at a bond. Your bond is trading at a premium level because the coupon rate is locked in at a higher rate than what the market price is in. As the bonds go down, then that means your bond is a lot better, and vice versa. If interest rates go up, then the bond you have now gives less return compared to the newly issued bonds. So, bond market, very important things to know for sure. A lot of people and a lot of money are in the bond market, so something that's very, very important to keep track of as we go. I'm guessing, Ryan, you're looking through Tyler's thing on taxes. Is what I'm guessing because I see your
I
face.
I am, that is what I'm reading. But yeah, uh,
So we'll
yeah, you're good.
All right. Well, whenever you come up with a explanation or whatever, or a comeback to Tyler, you let me know and
Oh,
jump right in.
there's no comeback. No, this
Oh,
doesn't no, it just doesn't, it doesn't talk about I mean, I don't think you can even buy SPX directly if you wanted to, but I could be wrong. I just thought of it the same as, like, okay, futures is 60/40, and then options on futures is also 60/40. Um, so, yeah, I didn't
right.
think you could buy indices, yeah, so indices, Tyler, indices, but, I'm joking. Gotcha.
I love Rock's comment. Rock, you're 100% correct, by the way. I've gotten really, really when as I've taught more and more, like every single year, like I just like, scan the room and I can see by facial reactions who has no idea what is going on and who's got it figured out. And so you really get good at it and knowing like what facial reactions people are showing, and it really helps you to figure it out. And then you don't give them a paddle. We can't do that. What did Hannah say? What is this? Oh, December. Oh, interesting. Oh, this was wait, when was this, Hannah? From a while ago. 42% for a rate cut versus 58 for staying current. When was that screenshot? I'm curious. Oh, the 20th. Oh, that's interesting. So 2 days, yeah, so 2 days ago before the Fed members came out. So 2 days before, which would be Thursday. So Thursday that came out as 40%. And then the Fed members came out yesterday, made those statements, and then it jumped it up to 70, which is crazy. With furlough, yeah, they shut down the, yep, 100%. So interesting. Yeah, I mean, we could open up Monday and then all of a sudden they're gonna be like, nope, we're not cutting rates, and then it's gonna just like crash crash the market. I feel like right now. We're walking like this fine line of the market where it's like any sort of news break that comes out regarding interest rates, inflation, tariffs, I think we're going to be hitting some crazy moves in the market, whether good or bad. in my opinion, because now we're on a tightrope again. We kind of weren't on a tightrope when tariffs kind of died off, but then the government shutdown just revamped everything back up. I feel like so that kind of sucks.
Well, that,
But
but then also we had no data, which is going to make it any bearish moves, and we're finally getting data. So um, that's not going to help either.
yeah, and the data comes out and it's like, oh, the jobs market is better than what we expected now, and like, oh, okay, we don't need a rate cut then, and it's
Yeah.
like, oh, okay, and the market's like, yeah, this is awful, boo, like like it's wild.
Yeah, it's going to be all good though.
Yeah, Santa Claus rally, guys, get ready for it.
We'll see.
Que- Question 6. For those in the US, short term capital gains are taxed as ordinary income. True or false? Can we do next question so I can use the restroom after? Yeah, Rock, we can wait a minute after this one. This is a true or false one, so it shouldn't take too long.
I have to get up.
Ryan, go ahead.
So, but, oh,
All right.
yes. So the answer is true here. Yeah, short-term tax capital gains are taxed as your ordinary income. Long-term capital gains are, I think it's 15%. It depends on your tax. It depends on your income. It can range. The general consensus is 15%. I think it can be higher or lower, depends on your income. I have to look it up. I can't
Yeah,
remember. I
it can
remember.
go like I think it's like 10, 15, and 20, I think are the long term
Well,
capital gains.
was it? And that's all about
But
income level.
I believe it's still based on income level. Yes, I can look it up for you right now.
I forgot.
Let me see.
I mean,
I'll
I
find it.
looked it up and I created this question because I was gonna do, what's the number question selecting, but then
Oh,
I
so
was like, that doesn't
yeah,
work. Go ahead.
so it's 0, 15, and 20. So 0% up to 48,350, 15% 48 to 500,000, and then 20% over 500,000 or 533 technically. So you make over half a mil, you pay 20% on long-term capital gains. If you make between 48 and 532,000, which is a huge window, 15%.
Makes sense. Okay, good to know. You can
Yeah,
wait
did
for
you need to step
Rock.
away for a minute?
Yeah, I'm gonna get it. You don't have to wait for me, but I have to. My dog is wanting outside. I have to go let her out. She's being persistent. But and then if Fridge is back, you don't have to wait on me. Okay.
All right. Rock, let us know when you're back in the chat, and I will sit here and do my best to entertain people. Capital gains are the real tax loophole. Yeah. Brock is back now. And gifting. Yeah, gifting is really, really good, Hannah. I know. I know people talk about a lot. If you do, I think you can gift up to 15,000. 23. Is it 23? I thought it was 15 for some reason. Max amount you can gift someone tax free. For 2025, you can gift up to 19,000 per person. Married couple, 38 for filing taxes. Yeah, interesting. The lifetime exemption is 13.99 million per individual, Hannah. So I want you to know, you are probably almost capped out at your lifetime gifting of $13 million. Fun fact. Did you know that, Ryan? I see you came back already.
What was what?
You can gift the max lifetime you can give gift without taxes is $14 million.
Gotcha. Gotcha. I know there's.
And
I know. I
annual,
can't remember the limit per year. I knew there was a limit every year. It was like 20 or 30.
yeah, we looked it up as 19 right now.
Gotcha.
Did you know that you see that they raised Roth IRA contributions by $500 for next year? It's pretty big
No,
W there.
that is big. All right, that is big. Okay, once again, you can
Yeah.
go to the next question. I have to get up because my dog is wanting in now.
All right. Question number 7. Which affects your credit score the least? I feel like we've done questions like this before, but gifts, tax, and then 14 million are related, but not the same thing. I know there's also the idea of gifting housing is like an interesting like line to walk for taxes. Like you can gift like the house that you like. If you have like a house that you like paid off, you can get estate taxes. Yeah, that's what I thought it was. So which one affects your credit score the least is new credit inquiries. Okay, payment history obviously is a huge one to think about look at, right? Because if you don't make your payments, then you are more of a riskier person. Amount owed also does because if you max out your credit cards, you owe a crap ton of money on things. You become very, very risky in terms of someone letting someone borrow money. And your length of credit history, again, the more of the longer your length is of credit history and paying things off, the more reliable you seem as someone who would want to loan you money, I believe. So that's why the least of these that impacts it is your new credit inquiries. If you have a short length of credit history, you're really you still can come off as a riskier person to lend to because they don't know how good you are at paying off like loans and debt
Right.
and everything else.
Right.
So Ryan, is there anything else you wanted to add to that one? This is your question, but
Yeah, no, thank you for taking it. Payment history and amount owed were like the most impactful. I can't remember what the percentage is, but they're the most impactful. The next most is length of credit history, and then least is new credit inquiries. And then I think something else that I can't remember off the top of my head. Um,
is it utilization?
it might be that. That sounds right. There's only one more, so it's something like that. But yeah, it's still going to affect your credit score, Rock. But think about 20 points is really on the grander scheme of your like number. 20 points is not that much in percentage terms, unless your credit's at
Yeah.
200, which I hope it's not.
Yeah. So they look at so utilization is your percent of credit used, like Hannah said in the chat, which is basically like if you have a credit limit of 5,000 and you hit 5,000 every month, like you're coming off as like a high roller, high risk. You want to have like a certain, I think it's like 30% is like the max utilization that you would want or something like that. So that way, like you don't come off as too crazy. So if you have, say a $10,000 credit limit, the max you should use per month would be like about 3,000 ish dollars or something like that. I believe it's like 30% or something like that for your like best way to keep your credit score pretty nice. But under 30. Okay, that's what it was. Yeah. I know my credit right now is I think 804. I don't think it wants to flex the credit numbers. I'm at 804 though. Yeah, what do you got, Ryan?
I don't know, like 7. It's just under 800. It's like around there. I mean, I could look up my Experian account or
So when I with
Equifax
my
or
credit
whatever.
card, with my Discover credit card, I'm using the FICO every month for free, which is nice.
Wait, you
I
get
use
what?
FICO a lot.
What you cut up there?
My
What?
Discover credit card every month. Oh, so my Discover credit card every month gives me a free breakdown of my credit score from FICO. So it's
Gotcha.
nice. I don't have to pay for it.
Yes, my credit cards give them to me too. I just delete them because and don't read them because I know it's high enough. And if
Oh,
I stress on the change from month to month, it's not worth it.
I was so bummed. I went below 800. I was so pissed. I paid off.
See?
You know what it was though? It's because I paid my car. It's because I paid my car off. Because I paid my
Yeah.
car off early. So they were like, "Oh, you're not using. You don't have a credit line." So they tanked my score, and I was like, "That's stupid. I actually showed you I'm a great borrower, and you tanked my score.
What do you mean by
It's
tank
crazy.
though?
Like it went from like 800 to like 760, I think 750. So
Oh,
it was like 50 points.
I mean, yeah, 50 points, but it is still in the very good range.
I know. I keep on looking at like mortgages and stuff. And I'm just like, dude, man, my credit score, whoo, put that number in like 804, baby. I know you need more lines of credit. It's really annoying. It's so weird how it works, where it's like you get dinged if you have too much credit and you maximize all of it. But then you get dinged also if you don't have enough lines of credit because you don't show that you could be sustaining different debts. It's like
Yeah,
it's so weird.
or um, the annoying thing too is like if like I have old credit cards, they don't want you to close them because that doesn't look
Mhm.
good. It's like, stupid stuff like that.
Yeah. They love our debt, yeah, and people are yeah, the consolidation companies make a crap ton of money when you get
Yes.
consolidation ratings and
Try
all that crap, like, oh, it's unbelievable.
Why am I not? Okay, well, I'm trying to get on Equifax, but I'm trying to get my credit report and it won't let me. I can't look at it. I don't understand. Anyways, go. You continue.
Alright, you keep looking for it. First of all, you know what I didn't ask also, we're 7 questions in. Is the audio actually being picked up, Ryan? We're like
It's
7 questions
it's
in.
you're good. Yeah, it's been going.
Okay.
It's good to double check. Good to double check.
Question number 8. Which of these is an advantage of ETFs over mutual funds? This is actually something I did not know about, honestly. an advantage of an ETF over a mutual fund? See if people know the answer to this one.
Good to know, Rock. I do have all of the 3 of them, but go ahead.
In the end, and so the correct answer was intraday trading. I mean, an advantage would be higher fees. I don't think that would definitely not be an advantage. So I'm glad no one picked that as like, oh wow, I pay more in fees. Like that's great. Like that's not an advantage. Active management. So I believe these are both actively still managed, but since here it's a mutual fund, is paid as a higher fee. But you could trade ETFs in the trading hours, and you can't do it over mutual funds, which is interesting. I did not know that. I don't know if you knew that or not.
No, the only time I've ever had mutual funds was, like, someone managed my account and bought mutual funds for a little while, but that I did not know. I think I
Yeah.
sold them though, so now you say it, I remember it being kinda weird.
Yeah, but like they're both. I mean, but the thing is that they're both actively managed. Like SPY ETF is actively managed. It's rebalancing itself like all the time, right? So it's still actively managed, just like a mutual fund is. So it's not an advantage that an ETF has because mutual funds are also actively managed, like an ETF. So it's not an advantage. They both have the same thing. Um, the big difference is that you could trade like ETFs in the middle of the day and not, with mutual funds. I did not know that. Fun fact.
That's a good fun fact.
Yeah, I said, "Don't let me." Oh,
I'm gonna
rock.
take a screenshot for you, Ty, later.
I wanted to sell. I had a bunch that I wanted to sell to put the money elsewhere and had to wait a day for them to clear. Interesting, yeah. So I guess because it probably takes a while to close, maybe I wondered. I don't know.
It's a Yeah, I think
It's
it's just a
interesting.
process.
Yeah. Question number 9. What is the name of this candlestick pattern? And oh, look at that. There's the candlestick pattern.
Yes.
Bullish engulfing, hammer, doji. I think Royalty posted a big pattern of this on Spy, I think, for the week or for the day.
Or
I
something
think.
similar to it, one of the 2. Yeah,
Yeah.
he posted a bearish engulfing. Uh,
Right.
yeah.
Yeah. So I didn't want to say the answer, Strat
Yeah,
Cats, where I was like, oh, I think he posted something like it. But yeah, I knew it was bearish engulfing on the Spy because that thing was crazy. Like, did you see that candle from Thursday? Like, that was a wild candle on Thursday for the Spy.
yeah, it wasn't great.
Yeah, I mean, you were up 1.5%, and then market opens, and it was, like, kinda hidden there, and then I was like, "Oh, yeah, by the way, it's gonna just sell off the entire day and be down 1.5%." It was a 3% move overall, like, on the day from the high to
Yes.
the low.
It was a whiplashy day.
Yeah, I just was like, "Dude, that's crazy." So I made a video about it being like Wall Street bets. People were just like this one dude was like, "I bought calls to scalp, walked away for 5 minutes, and I was down 30 grand." And I was like, "That's wild." Like, okay,
Yep.
dude. Like,
You
actually
mean,
wild.
surprising they walked away in a yeah, I did exactly what Hannah said. Surprised they walked away in the middle of a trade.
Yeah.
That's a scalp.
I just I just really think no, but I think he just wasn't expecting a huge dump like that of of
Well, off
so quick.
you really is that your guess? I mean, I guess you'd never think
Yeah.
it'd be possible. I mean, I get it. Like, it's not happened.
Oh yeah, there were some dudes who had 0 DTE like puts. They went from like 10 cents a contract to like $4. Like it was unbelievable returns.
Jeez.
Yeah, I was like, oh, that must be nice. It couldn't be me. I was at work.
Nice job, Hannah.
That was
That's
me.
great.
Nice. I love that. Love that. Question number 10. Moving on. Quantitative tightening refers to what? Cutting interest rates, adding liquidity, reducing the Fed's balance sheet, increasing government spending. For the line. All right, I'm gonna take a walk.
I do remember, but that wasn't really a scalp. He would do that's just a day trade. But I do remember
Yeah.
uh, the fish doing that. But to me, like a scalp, you're in and out within a minute, maybe.
Yeah, maybe a couple minutes. Yeah.
Yeah,
I'm glad everybody knows about quantitative tightening because I believe what is it?
not a
I
minute.
think we're stopping quantitative tightening or quantitative easing. I'm trying to remember. I get confused once in a while. I think we're stopping. What are we stopping? Hang on. What are we stopping in December? Is it quantitative tightening? I forget. Someone can tell me if they need to.
I don't know the answers. Don't ask me.
I think it's I think it's tightening.
And
Let
I
me just look it up
agrees
really
with
quick and
you.
just double check. Yeah. Yeah, quantitative tightening policy on December 1st. The decision was made to address liquidity strains and prevent the Fed's balance sheet from shrinking further, which will stop the withdrawal of cash from the financial. Yep, there we go. Quantitative tightening. Yep. Which people are saying like, oh, that's going to be great because that'll allow more money to flow in the markets and risky assets like stocks and all that kind of stuff. And I'm like, we have so many bigger problems right now, guys. Like, you need to understand that. Beautiful singing. Thank you, Naomi. It's my nighttime job. I go to karaoke. Oh, I'm glad everybody knew that one. That's awesome. All right, moving on. Question number
Naomi's doing great.
11. Which of the following would most likely strengthen a country's currency? What were you going to say, Ryan?
Said Naomi's doing great.
Heck yeah. So, strengthen a country's currency. Which one will most likely strengthen the country's currency? And the correct answer is, in fact, higher interest rates. The idea behind it is that as rates go higher, it costs more to borrow against your money. Basically, it costs more to borrow your money, which means your money's got a little more value to it. Cutting rates is worse because you can borrow for cheaper, which means more people have access to it, which makes your value worth a lot less. I don't know if you have anything else to add to that, Ryan, as much, but that was kind of my explanation as to basically how it works with higher interest rates, increase the value. Lower interest rates are going to decrease the value because of borrowing.
Yeah, nice. No, I don't have anything to add. Great.
Yeah, and the carry trade. We did the carry trade question, I think, 2 weeks ago was carry trade about how it works, basically, which the
Yes.
carry trade, if you're not familiar with the carry trade, the idea behind it is that you borrow against, like the Japanese yen, for example, which is like 0.25% interest rates. Take that money, put it into any kind of bond or something like that over in the US market at like 3%, 4%, for example. And then the difference is the spread is what you get to basically make as profit overall. The problem is when rates get hiked, it costs more to borrow, which can cause an unwinding of the carry trade, which we went through a couple years ago, I believe. And I think even recently there's a little bit of fear because I want to say it was maybe April that Japan hiked the rates. Oh, it was last year. Interest rates affect borrowing rates, which affects how much
Yeah.
your currency is printing, which affects inflation, which is how much. Ah, okay. No,
Because
okay.
yeah, 24, that was the big drop, and then this year, there's the tariffs, the big drop.
Yeah, I thought there was something though with I thought it was some when did was that was it last year when Japan raised their interest rates for the first time like to be positive like in the last like 15 years?
I
Because it's
think,
been 0% or negative.
yeah, I don't know.
Let me take a look here. Let's see. We got Google. When did Japan raise? Japan has raised the interest rates multiple times in 2024, first ending its negative policy in March by moving from zero to then raised the rate to approximately 0.25% in July, followed by a further increase to fifty basis points in January of this year. So it was the end of last year. Yeah. And it's the first time it's been positive in like at least 10 plus years or something like that. Wild stuff.
Wild.
Wild stuff. And Naomi's on a hot streak of 7 in a row.
Jeez.
Unbelievable.
Rolling it. Rolling.
Rolling, rolling. Question 12. Let's see if we can keep it going. What is the main downside of stock options as employee compensation? This is a weird one, actually.
Yes. And to be clear, it's not options on stock, it's stock options.
Correct. Absolutely correct.
Just the caveat. I mean, you've said it right. You wrote it out right, but it's kind of interesting. Anyways, go ahead.
Yeah, yeah, yeah. Yeah, and so the actual answer is earnings dilution, okay? And they basically function the same as basically any other kind of stock that you'd be looking at essentially in terms of taxes, dividends, and liquidity. You can sell them after a certain time period, so liquidity is still there and everything else. But earnings dilution apparently is one of them because it impacts the earnings from these, that these companies announce and stuff like that. So I also did not know this one honestly until I recently looked into it as a result of it. So very interesting stuff there. I don't know if you have anything to add to that, Ryan. I really don't have much on this one. I'm still learning more about. I didn't really think about much about employee compensation for now, but very interesting stuff. Yeah, they're called RSUs. I remember. Well, no, they're not called that, but I do remember hearing the RSU as a acronym or acronym. I think
Gotcha.
something like that.
Ac
Yeah.
I
So
I I was reading, not listening to you, sorry.
no, that's all good. Yeah. So basically, again, I mean, taxes is still the same, dividends is still the same, liquidity is the same thing. So the big thing that's the difference is earnings dilution. Jack hat, 5 in a row. Congratulations. It's a close race here for top two. Close race. But it's still anybody's game here. Moving on to question
Yes.
13. Selling a call obligates you to do what?
I don't
This
know
is
if this
Ryan's question.
I don't know if this is a previous question or not, but, definitely selling a put
Probably.
obligates you to was an old question, and I found that and decided to do call, but I didn't check if I've done selling a call before.
We've
Probably
probably
have.
used questions in different ways before, but it's all good. Take it away.
Yes, so selling a call obligates you to sell the underlying if exercised. Buying the underlying is selling a put, and then hold the option till expiration. I mean, you're not obligated to do that. And then adjust delta daily. That is a random AI one. Now, I
Hey, you
might
can get
have
me.
messed with people's heads by saying put during this, and that's my bad. And so, because you might have heard me say put and read call and still thought put.
Well, Naomi didn't think that.
Oh, she got it right. Well, there you go.
Yeah, she's only got it right there. Question 14. Which account allows tax free qualified medical withdrawals? This is my question.
Mm,
401k,
yes.
Roth 401k, HSA, traditional IRA. Let's see if people know. Tax free
See ya,
qualified
Hannah.
medical withdrawals. Bye, Hannah. Take care.
Hey,
Everybody knows
Suey.
the HSA,
Yeah, go ahead.
the health and savings account. Everybody knows pre-tax deposits to 100%. Yep. And it's very, very nice. And believe it or not, also you can actually, like I have my money basically invested in. I have some money in an HSA as well. My employer gives me like 1,000 a year, so I put that into I put that into SPY and QQQ only. And I believe after a certain time period, you can still take it out. Even you got to pay a little bit. I don't know if you got to pay a little bit of taxes. You take it out for non-medical when you're like 60 plus, but it still can be withdrawn to use as spending after a certain age as well when you qualify for it. Fun
Nice.
fact.
Nice. And, Suey, see you join. I don't think you played before. If you wanna join, it's a little late, but you can still play if you want to. Kahoot.it, and the game pin is on the bottom of the screen share there.
Or if you wanted to just listen to some fun facts
Yeah, or you
from
can just hang
myself and
out.
Ryan.
That is nothing wrong with just hanging out.
Yeah, Strat Cat. Yep, 100%. Yeah, so it's very interesting stuff. Again, it's a very, very interesting, way of looking at it. I think I did the math for it, the compound interest one. I put like $1,000 every year for like 40 years. It grows to over $250,000 just for my employer investment that goes in, which I think is pretty cool.
Free money.
Free money, man. I'm here for the fun, not the prize. And that is why that is the best answer we have gotten all night. We're not here to be selfish for selfish desires.
No.
Here for the fun.
Yeah.
And that's what's up. Question number 15. What represents the relationship between the prices of futures contracts and their time to maturity?
Yes. This is not a tax
This is a
one.
Ryan question.
Not a tax one.
Nope, but
Uh,
still a Ryan question.
mhm, mhm, mhm.
So I don't have much to say on this one, honestly.
Yeah, that's okay. And the answer is the forward curve, as everyone mostly got right. So it's just, yeah, because future monthly contracts, as we've talked about in previous trivia, the letter in the contract, future ones are going to trade at a higher rate, which is contango, or a lower rate, which is backwardation. So that is called the forward curve, the difference in the current contract to the future ones.
Yep, sounds good to me. I have no
Mhm.
idea.
Eh, You know, it's okay. It's yeah, it's good to know.
Yeah, I just wouldn't know the answer to it, but clearly a lot of people did know the answer to it. So shout out to you guys for all being super intelligent individuals.
Yeah, obviously familiar with futures, most of the group there.
Yeah, true that. And me, not so much.
That's okay.
Number 16. Which product is not taxed at the preferential 60% long-term I feel like we just talked about this like a couple questions ago.
But it was different, you see. It was different. I
Yeah,
asked
yeah, it was
in
definitely
that one I asked which one's not all long term. And as you can see, SPX is not an answer on this one here. So, no, Tyler, I don't. It seems like I have two, and that's why I left it on there. So the answer is IWM. The reason the answer is not silver, and I know for a fact because and it's a weird one. That's why I put it on there. My tax. So I get a tax statement for Tasty Trade that I can download, and SLV is 1256 contracts. I don't know why. Maybe it's because it's a commodity. I don't know if you trade the ETF though, if that's a 1256 based on what you said. But what I get from Tasty Trade, it tells me it's 1256. That's why I threw it on there to be yeah. And so I think it's the same with GLD as well. And then I don't know about other ETFs that
yeah.
are commodities. But so that's why I threw it on here. But the answer is IWM. VIX is a indice, so preferential tax treatment. NG futures, preferential tax treatment, and then SLV, which I wanted to be tricky, so that's why I threw it on here.
I was gonna say, like, I wonder if like GLD also falls into that because GLD is the gold ETF for investing and stuff. So that's why I wasn't sure about it either.
Yeah, and then you know, like UNG is the natural gas one. Like, I wonder if that's you know, there's probably a few. I think USO is one of them. I could be wrong.
Yeah,
Well,
it says silver is not. Yeah.
maybe look it up in somewhere not AI. I don't know. I'm telling you, I mean, I could take a picture of it. I guess I could take a screenshot of it, but this is what the output. Um, I don't. So I could be wrong though. You know, I don't. I could be basing that, and then maybe later on I'll get my tax form, and I'm completely wrong. I don't know.
Let's see. You know what? Can I do some research? Let me see.
You can do. I'm just gonna
Taxes.
pull up my. This is a. Of course, this is a Google sheet. So
Let's take a look. We're all plugging in. We're all plugging this in to
really
figure out
exciting content we're creating.
the TurboTax support. Oh, come on. Let me get it.
This is from Taste. This is the Tasty tray that I use for my taxes.
So
And if
someone that
it's
was anonymous on this thing said those ETFs, which is like SLV, GLD, they said are treated as collectibles. I don't know if it means commodities. Like
huh,
I think collectibles are like baseball cards, but the options are treated
yeah,
as non-equity options and therefore 1256
huh.
contracts.
Not the case with USL, by the way.
They all look boo boo. It said boo boo. That's interesting.
Anyways, so wanted to be
Anyways,
tricky. And I had to double check that I was right, Tyler. That's the only reason why I had pretty good confidence on this one because you know I've not been right before.
yeah, and Tyler's the king of fact checking people. I feel like so.
No,
I know. Oh man. All right. Question 17. Which implied volatility is below realized volatility? Oh no, sorry. When implied volatility is below realized for an extended period of time, which strategy tends to perform best? I can't read sometimes.
It's all right, man.
Selling strangles, selling put spreads, buying strangles, or covered calls. Which one is tends to perform best when the implied volatility is below the realized one? And the correct answer is, in fact, buying egg strangle. The reason why, if you think about it, you usually, when your implied volatility is higher than the realized one, selling options is your way to go because you get maximum premium compared to when IV is low. So, selling strangles is higher premium, selling put spreads, same thing. And cover calls, it doesn't say the word selling in it. Cover calls are still selling options, which is higher premiums. Buying when IV is low is good because when the IV expands, your contracts have more value, which increases your profitability as a result of it.
Yes.
Anything you want to add? Feel free.
No, that's great. That's exactly correct.
Hey man, thank you. I did a little bit of research myself.
Nice.
Tight race here. Naomi and Stratcat, top places right now. Love to see that.
Anyone's
Come
game.
back from it or not.
Anyone's game.
I don't think it's I don't think it's Tyler's game anymore. I think Tyler lost. But that's just me. Flight Manifest, welcome in, my friend,
Yes.
to Kahoot Trivia Challenge, where you get to listen to questions. I know it's a little bit late in the game, but if you wanted to sit here and listen in to hear two amazing individuals who are super intelligent and one is on camera talk about finance stuff, feel free.
Yes. Yeah. And you
Question
keep yeah.
18. What is the main source of revenue for the US government? Corporate tax, tariffs, income tax, estate tax. Interesting. We talked about estate taxes earlier in this game show
That's true.
while you walked away for a minute. We actually talked about almost all of these except for corporate and income, I think. Or no, it's not all. It's about half. We're talking about tariffs a little bit and estate taxes.
Well, you forgot to include in Trump's eyes, maybe like on that one. No, I'm just kidding. That's bad.
It's right. Yeah.
Yeah.
And again, everybody's got this one right 100% income tax, where most of the revenue comes from, not tariffs, not estate taxes, not corporate taxes. It's the taxes that we all pay every single year.
That
So much
is
fun.
that is the income. That's pretty much it.
Yep. So a little bit of a history lesson because we had the big taxes go back in when we first, came here like 1776 and all that, weird history stuff you probably learned about. Waiting for my $200 refund. Heck yeah, Rock. We're gonna do that $200. Enlighten us. Oh, got a little bit close. It's a little bit closer. A
It's
little bit
close.
closer. It's like a 300 point difference. Refund. I don't know what those are. Before that, it was tariff. Income tax was 90. Oh, was it really? I don't know why I thought. Huh. Well, I wasn't born in 1913, so I wouldn't know the answer.
I don't think Tyler was either.
Yeah, added my Tyler knew that. Added that Tyler was born in 1913 also.
Yeah. 110
Dude,
years old.
Yeah, right. That's why he gets everything right though, because he's just alive forever. He's a
Yeah.
vampire, dude. I
It's
get it now. I'm
112.
understanding how this works now.
Yeah.
He went through the Great Depression. He went through the dot-com bubble. He went through the housing market. He went through COVID. Like this
Black
dude went through
Monday.
every single thing.
Yeah.
Black Monday. Yeah, we went through all of it. Question number 19. A stock with high short interest but low borrow fees suggests what? Hedge fund accumulation, abundant shares available to borrow, near term catalyst, high cost of capital. Do you guys know how short interest stocks work? We did a little bit about these before. Do you know what we talk about with meme stocks like Beyond Meat, which is in the absolute dumps? And the correct answer is the abundant shares are available to borrow. So because the idea behind it is that if you have low borrow fees, you could borrow shares for a lot cheaper and there's gonna be more shares available to do it because you could borrow for a lot cheaper. When those borrow rates get super high, like at one point I know Beyond Me was like 600% borrow fee or some crazy thing like that, like a loan. It was absolutely ridiculous. So not everybody's that means you have no shares. You don't really have as many shares available. If you don't have a lot of shares available to borrow, then the rate is obviously going to be a lot higher compared to having a lot of shares available. Then the rate will be super, super low, right? It's kind of like supply and demand almost in a way. So it's very, very interesting. But shorting stocks, very bizarre. I've never actually done it myself. I don't know if you've ever done it, Ryan, but I've never shorted a stock before.
I have not, the yeah, yeah, doesn't I have to be very, very convinced because that would be very hard to step in front of sometimes.
Yeah, shorting stocks is wild because you get hit, you get on the bad side of a short squeeze, and like you are toast
Yeah, right,
on
right.
that. Like you either double down your borrowing and hope for the best, or you just get like liquidated out and
Exactly.
forced to get margin called basically.
Yeah.
So, and we're looking at basically, so we're looking at a 400-point difference between the top two, Naomi and Strat Cat. We have
Go.
one question left for financial trivia. No pressure to you guys, of course. But again, if you don't want the free month, you can hit up Ryan in terms of the mentorship if you'd like, or if you want to do something along the lines of a was it a free trade basically on your end, Ryan, essentially?
Yeah, like you tell me, we decide a dollar amount what to do, and then anything that's a profit, we will split.
Okay, love to see that. And then if you lose money, then you just lost Ryan's money, not yours.
Right. And
So
then if I lose, I lose. No splitting that.
yeah. Or, if you want, I know Rock wanted a 25-pound butterball turkey. So if you
Yes.
want one of those, we can make that happen too.
That's what you want to do.
That would be good for your tax losses though, Ryan. If you start doing these trades and people start just tanking your portfolio, you can write that off really quick.
That's yes. That is great. Naomi already calling it out what she wants. Oh, it's good.
Yeah,
It's
I mean,
confidence. I like it.
I'll just delete StratCat now. We'll just give it an easy W.
No, no, I think Naomi's got this one.
I know I'm trying to build suspense here. Do we know what the last question is? The last question yours or mine? I don't even know.
I
I haven't kept
have
track this
not been
time.
paying attention. It's been pretty even throughout this time. Not too heavy sided, so hard to know.
Right? There's some weeks where it's like just my questions like 7 in a row, and then
Yeah.
Ryan is like 2, and then it's like another like 3 for me. So okay,
It
going on
happens.
to question number 20. When paying off a credit card, it's best to
My
this is
question.
Ryan's question.
Yes.
Yeah. So Naomi, if you get this right, it's all because of Ryan. If you get it wrong, it's also because of Ryan, not because of me at all. So do not get mad at me. Thank you.
Well, I think it's a good it should be probably a pretty easy one, but they are very wordy choices, so and there's slight differences in each one.
Yeah. Who likes to read?
There we go.
Oh, look at that.
Damn it.
Everybody got it. Go ahead, Ryan.
Gonna
Take it
come
away
down
for
to
the final
quickness of
victory.
answer. What'd you say?
Yep. So take it away. Explain
Oh,
it. Go ahead. It's your question. You got it.
yeah, so it's best to pay off the statement balance by the due date. If you obviously, if you do it after, you can accrue interest. If you pay off the minimum balance, you're still gonna pay interest. So best to pay off your full statement balance by the due date or before if you want to, and then you don't accrue any interest.
If anybody here said pay off the minimum after the due date or after the due date year, like you're actually wild. I'm just saying.
Yes. But yeah, I mean, the only reason I put it in here is I had a friend whose dad told him, all you got to do is pay off the minimum balance. Like, that's how you build credit. And I was like, oh God, don't do that.
Okay.
I
Dave
didn't
Ramsey's
talk to
rolling.
him very well
Dave
then at the
Ramsey's
time,
rolling
though.
right now.
Wait, what?
I said Dave Ramsey's like rolling in his bed right now, being like, "What are you talking about? Credit cards?
Yeah,
You
right.
kidding me?" I love that. All right, so here we go with the final polling here. So week 11 in third place, we have Tyler, who joined late. Congratulations, Tyler, for still getting third place. Second place is Stratcat,
Bye,
and in
Naomi.
first place is Naomi. Congratulations on winning for
Yeah.
financial trivia this week. And to everybody who has played, thank you so much, as always, for playing. We always appreciate everybody tuning in to watch. And
Yes.
hopefully, you were able to learn something new. I know I did. I'm sure Ryan has also learned something new as well, because our
Yeah.
questions, we don't run by each other. We just throw them on here, and we and we teach each other as we're doing this, believe it or not.
Yes.
So if you are this part of the YouTube video and you're still watching, thank you so much for supporting these channels as we continue to grow. Again, if you want a free week, are you still in a free week, Ryan, for Discord here?
Yes. Free week.
So if you hit up Ryan either on YouTube or on After Hours, or if you were able to get in touch with him some other way, you can. You get a free month, or not free month, a free week, according to his WAP account, I believe, his WAP website.
That is correct.
And the best way to flip this is to get the free week, and then you get to play here on the weekend. You win here, you get a free month, and you can just keep stacking, 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 and you get all of the amazing education that we have here, from trading futures to trading options to trading crypto to trading anything to selling options. Everything here you get for free if you are able to win this trivia challenge here. So,
Yep.
thank you for everybody for tuning in. Ryan, anything you want to say before we get out of here?
No, congrats, Naomi, and thank you very much for joining everyone. Time as always.
Absolutely, man. Everybody, thank you guys so much, and we'll be back here with another week of financial trivia.